For years now, tech industry analysts have written off Microsoft as a 20th century phenomenon, fat and happy from its Windows monopoly. However, the tech giant didn't have a breakthrough innovation in decades, and Google's disruptive developments slowly displaced Microsoft to become the leading tech innovator. Now, Microsoft is striving to take the lead once more with its investments in artificial intelligence and gaming in a highly competitive market where companies are relentlessly seeking to achieve the next big breakthrough and displace their rivals. Will Microsoft be able to revive its lead in innovation, or will it be surpassed once again by Google? Welcome to Stocks Explained, your trusted guide to informed investing. Founded in 1975, Microsoft became known as the developer of the most popular computer operating system, Windows. Its software developments evolved to include productivity apps such as its Office and Dynamic 365 solutions. While on the hardware front, Microsoft developed its own slate of devices such as the Surface netbooks and Xbox gaming consoles. In 2010, Microsoft launched its Intelligent Cloud segment through the Azure brand, currently its fastest-growing business. However, most of these new offerings consisted of follow-ups to developments from competitors, leaving Microsoft behind in the innovation career. The rise of Alphabet's Google created a rivalry between the two, shaped by their competition in various markets including search engines, cloud services, productivity tools, and operating systems. And just when it seemed that Google was ready to come out victorious, Satya Nadella took the reins of Microsoft in 2014, starting a cultural shift across the company. Instead of protecting its assets, Microsoft went on the offense, making big investments in existing tech and pursuing emerging opportunities. To do so, Microsoft leveraged its substantial cash reserves and talented workforce by forming strategic partnerships and acquiring other companies. In 2023, the tech giant has disrupted the market with exciting new developments in artificial intelligence. And prior to that, Microsoft engaged in a series of market-opening acquisitions, such as workplace social media platform LinkedIn, developer platform GitHub, and the still pending $69 billion deal for video game developer Activision Blizzard. These have expanded Microsoft's presence to new markets, allowing for stronger cross-selling capabilities, which benefited the cloud business strongly. In early 2023, Microsoft restored its renown as a leading innovator through a noteworthy investment of $10 billion in OpenAI, a company specializing in generative artificial intelligence. Microsoft had been working with OpenAI for years on ChatGPT, a chatbot powered by advanced deep learning methods that can produce search responses resembling human-like interactions. Microsoft quickly identified ChatGPT's revolutionary potential to improve productivity and rolled it into its Bing search engine and Edge web browser. This could make Bing a more interesting alternative to Google search, which has dominated with a market share of over 85%, and bring Microsoft better monetization results from advertisers. In addition, Microsoft's first-mover advantage gives it access to a leading AI technology that will reshape and modernize its existing applications while leveraging Azure cloud computing services. As a licensee of OpenAI's software, Microsoft has access to new AI-based capabilities it can resell or build into its products. Microsoft's second big bet involves expanding in the massive gaming industry with the $69 billion acquisition of Activision Blizzard. While Sony's PlayStation has consistently outperformed Microsoft's Xbox console in sales, Microsoft's focus with the Activision deal lies beyond console sales. Instead, the company aims to enhance its Game Pass, a subscription service resembling Netflix for gaming, and develop more games for mobile phones, recognizing the significant profit potential in that market. These developments bank on the success of Microsoft's cloud business Azure, which has grown to become the second largest company in the market after Amazon Web Services. Analysts expect Azure could surpass Amazon Web Services to become the leader in cloud space with stronger bundles and the implementation of AI. With Microsoft's position in several related markets, it is able to execute a powerful bundling strategy, pairing together essential solutions into a package, forcing customers to expand their relationships with Microsoft and crushing competition. Market analysts have received Microsoft's latest bets with excitement, expecting a new era of leadership for the tech giant. Analysts at Wells Fargo said the AI venture could all add up to over $30 billion in new annual revenue for Microsoft, while the gaming market continues to grow with no ceiling in sight. However, some analysts have also pointed out many of Microsoft's challenges going ahead, which include the harsh regulatory scenario and a strong counterattack from Google. Google has been working on its own AI platform, Lambda, reportedly investing significantly more than Microsoft. Wells Fargo argues that Google holds a tech lead in conversational AI and that the perception of them playing catch-up is naive. Analysts even speculate that Google strategically delayed launching its in-house product to gather valuable beta test information from Microsoft. On top of that, Microsoft has been facing several antitrust probes since it started to increase its market power across several segments of the tech industry. Cloud computing has become an especially sensible segment due to the dominance of a few players and its increasingly critical role as companies shift their services to the cloud. In particular, the sheer size of the Blizzard-Activision deal has attracted strong anti-competitive concerns, with UK antitrust regulators blocking the deal, citing that Microsoft has around 60 to 70% of global cloud gaming services share. While the European Union approved the acquisition, its fate depends on the US's Federal Trade Commission. Furthermore, to fully leverage OpenAI's potential in the rollout of ChatGPT, Microsoft should acquire the full company, but that sort of deal would likely attract even more regulatory scrutiny. After years of playing second, Microsoft has taken the offensive once again in the tech sector, with strong bets that aim to solidify its diversified offerings. While some analysts are bullish on Microsoft's renewed investment spree, will that be enough to surpass its long-standing competitors? Or will these ambitious moves backfire, with antitrust investigations piling up and the looming threat of a retaliatory strike from Google? This was Stocks Explained. What company should we analyze next? Please let us know in the comments, like and subscribe.